Okay, so welcome back again. So chapter 9 is time and billing. Um, so if you're following along with me, you need to have the time and billing portable file up. Again, the password is Leader18. Now let's take a look at this. So when we talk about time and billing, right? As I've mentioned a few times before, that chapter 9 is where we'll see mostly where the customer slash jobs are going to appear the most, okay? Because the purpose of time and billing is that when you link your expenses and your income and you decide to bill your specific customer, you can keep track of it by linking the actual person to that job. So for instance, right, if you completed a job and you don't place it as the customer, you can link it to them, so then when you are completely done with it, it bills them automatically. Okay, so most cases, if you've done the reading, you're going to learn that the use of the time in billing is primarily geared towards expenses, especially when you want to reimburse them, okay? Or if you want to link a subcontractor or a 1099 worker, or if you want to link custom or orders, okay? So once again, when something is personalized or you want to have it towards for that specific customer, you can go ahead and instead of you would link the expense to them and you would pay for the expense, but then you pass it forward and have the customer pay for that to reimburse them. So that's exactly what the first thing that we're going to take a look at is what is a reimbursable type of expense. So again, it could be any of the following options here. It could be a current asset, okay? Or sorry, another current asset. It could be a cost of goods sold. It could be a regular expense, or it could be a other expense. Now, here's a really weird thing that the book mentions. It says that when you link up your reimbursable expenses, you can't link them up to income accounts. But it's really weird because when we actually set up the accounts, we set it up as if we're linking it to an income account. So it's a little confusing there, but yes. So we're going to take a look at how we can pass along, or in this case, when there's needed a service, right? And we pay for it, but we want to have the customer reimburse us for it, then this is how you do it. So again, most customers, right? When they ask for a specific thing, then you have to use some kind of third-party vendor, right? You need to pay for the third-party vendor first, and then the customer should be able to pay for it. Either you bill them or etc. So that's exactly what we're going to do here. We're going to first write off our expense first, and then we're going to link it to this particular person. So the first thing that we're going to do is we're going to write a check, because for this instance here, we are creating an expense, or in this case, we are having a document delivered to Express Delivery Services. And then I'm going to say document delivery to Miranda's Corner. Okay. The date on here is going to be 2/7 or 2/8.
It's 2/3, isn't it?
Okay.
2/3, 2019.
2/3 it is. Again, the date's not relative unless you choose it to be, if you want to make it like super accurate. But in this case, there you go, 2/3. Check number. And again, so this is what we're going to do. you have two choices. It's either you choose an account or you choose an item. Now, it doesn't matter in this case because if you have the reimbursable account available, or if you've created it before, it should normally be an account. So reimbursable expenses. Okay, so that's the account that I'm going to be using. And it's going to be for the amount of $20. Okay, and here is where we start passing on the bill. So in this case, I have to pay for this delivery service to send a document to Miranda's Corner. However, if I really wanted to, now that I've paid it, right, I can charge my customer to pay for not only the services that they ask me to send to them, but I can also give them charge them an additional amount. So that's what this is going to be. So when we come down to this little corner right here, there's this little section that says customer right here. And if I go ahead and click on this particular, let's say it's Miranda's Corner, right? MRI, Miranda's Corner. If I click on them, you're going to see that there's this little box right here that says it's billable. So what this actually entails is that I am going to send a bill to Miranda's Corner because this particular transaction is linked to this particular customer. It is their transaction. So by clicking on this billable window, that means when I invoice them, I'm going to tack on this extra charge. Okay? And this is called passing the expense along. So even though you are paying for it in advance, which we're going to take a look at a few examples where you don't pay for it. You just pass the bill along to your customer and expect them to pay for it. But this one's called a reimbursable expense because for this kind of delivery charge, right, you have to kind of make a payment in advance and then you're going to have the customer reimburse you for that expense. All right, especially when they're demanding that they want the contract to be delivered to them, right? Then we obviously have to make our customer satisfied by creating this expense. However, we're going to bill them for it, saying, hey, this is out of my convenience, so I'm going to charge you for this amount. So by doing that, this is what this billable little icon says. It says that we're going to make this charge, right? And then we're going to forward them the bill so they can pay for it. So that's what this little check mark is. And of course, the class is Walnut Creek. Right? And I'm going to go ahead and click Save and Close. Okay? So here, I just sent a check to delivery services, okay, and I made it to the reimbursable accounts, okay. So now I'm gonna go to my invoice and I'm going to bill my customer now, okay, and of course, okay, so right, so I'm gonna go to my customer and I'm gonna bill them by, typing in their name. And there you go, pulls up this, and then I get this window right here. This window says, hey, this particular customer has billable items, okay? And the question is, do you want to select the billable items that you are attempting to pass forward to this customer, or would you like to exclude it? So in this case, I want to bill Miranda for that bill, okay, and I'm going to click OK. So at the top of this window here, you're going to notice that there are 4 tabs that you can bill a customer for. First one is going to be time, all right? This is very important, especially for this type of service, right? We do a lot of time based on the photo sessions. So if you decide to bill your customer for your 4-hour photo session. So instead of charging them at your service price, you can bill them for the time. So it's very similar to consulting, right? If you have either professional consulting or tax consulting, right? You can pay by the hour instead of getting billed for the service. Okay, so in this case, you can charge your customer based on a time. Okay, so again, those kind of examples are anything that you choose. Like if you provide a service, but this customer is a good customer and you allow them to be timed, then you could go ahead and charge by time versus charge by service. Okay, so that's what that first section is. The next section is going to be expenses. So this is, as you can see in parentheses, there's a 1 right there. And you're going to notice that I have the delivery services expense right here. Okay, and once again, because I linked it and I said I'm going to pass forward this specific expense to Miranda, it appears on my window that I have one expense. Okay, and this expense could be anything, right? Most common one that you'll see in this particular one is if you're trying to bill somebody for an expense that isn't supposed to be for you, then because again, this delivery expense had nothing to do with your company, right? Had nothing to do with the core operating expense. This was something that the customer demanded. So this was a expense that you had to incur for the customer. Okay, so this as you can see, it has a reimbursable expense there. Then the next section here is mileage. So yes, if you offer to reimburse your employees, right, for driving or traveling, this is where you can so of course, right, how reimbursement checks works is that you already charged your bank card or whatever it is, you racked up your miles, and what you're going to do is you're going to bill the owner or whoever. It could be the customer itself too, right? If you do a photo shoot and they make you drive all the way to I don't know, San Jose, or they make you drive all the way to San Francisco, they should reimburse for traveling that far out because it's not in their general local area, right? It's not like they had the photo shoot at their studio. You made them drive all the way out there. So therefore, that could be something that you can charge your customer for, is for travel expenses or mileage. Most cases, travel expenses and mileage are covered by the company. So yes, you can bill the owner for that particular expense and the company pays for it. Okay, so in that case, then you just write yourself a check for this. But for mileage, you can't bill for mileage. And then last but not least, you have another small part for items. Okay, so when we'll talk about this example further on, when we need to when we purchase items for a particular customer, right? We do custom orders, so we can bill them for these custom orders. Okay, and they could be any item that you choose. Okay, so going back to expenses, right? We have one expense, right? And here, right, we were charged $20. Okay, now on this specific window, you know what you could do? You can charge your customer a convenience charge, or in this case, I'll want to mark up my price, right? Because once again, this was out of my convenience. I had to call them up or research our particular vendor who can deliver contracts. Okay, so therefore I'm going to mark up my value. So it says right here that I'm going to mark them up 20%. Okay, and where am I going to make this markup account too. So in this one, you do have to already create one. So in this case, this is going to be considered income to you. And this is going to be markup, let me see, right here, expense markup. Okay, and that's going to be considered income to you because you're charging your customer to not only reimburse your expense, but and you get to pocket 20% of it because once again, you're charging your customer whatever you want. You never want to break even for any reason, right? Especially for an expense that you didn't have to incur. The customer wanted it. So you can charge them a convenience charge. It could be a flat rate, it could be a percentage, whatever it is. So I am tacking on a 20% markup. Okay, so here it says it's $20 plus the $4 markup, and you can see right here that the total amount of that the person is going to pay is $24. So I get to pocket that $4 because of the inconvenience that this customer has, has encountered, right? Having me to deliver the document to them. Okay, so I'm going to charge them a markup percentage, and then I'm going to go ahead and click OK. So once you do that, now you can tell your customer that you're going to mark them up 20%. Most cases, you never want to tell your customer that because they're going to open up the bill and they're going to be like, what the heck is this? Okay, so, general rule of thumb, it's up to you if you want to display it, but because this is a charge, or like an inconvenience charge for you because, most of your clients, I don't know, come to the store and sign the contract, but this one is demanding you to deliver it to them, then that's where you can, discuss, hey, if you want me to deliver this to you, I'm going to charge you a marked up price. And if they agree, they agree. And you can send them a bill. So most cases, you definitely don't want to ever surprise your customers because then, that kind of, you kind of lose your customer a bit right there. But if this customer understands what the consequences are, especially, if it's not part of your main core operations, then yes, and you discuss with them and they agree, then you can go ahead and go forth with your day. Okay, so once again, here it says right here, so I'm gonna have them reimburse $20 plus a 20% markup. So that's $4, and I'm going to say thank you for your business. And once again, document delivery charge. Okay. And of course, usually these are non-taxable because it's a service. Okay. And I'm going to go ahead and click Save and Close. All right. And that's how we went from one expense and we took it and we billed it to our customer. Okay. And we billed them for a higher price than what we paid for it, right? So when you're doing business, you never want to break even. You always want to make your customer pay for it. But a second thing too is you always want to make a little profit out of it. Because if you break even, then your company's never going to make a profit whatsoever. Okay? So that's how you create a reimbursable expense. Okay? Any questions there? Okay.
So when you do bill your customer, QuickBooks pretty much just does everything for you. You just have to put like the numbers, how much you want to charge.
Correct.
And everything just goes right and falls along.
Correct.
And you are able also to, like you just tackle with $4 and you make it look like it's just a little bit of commission to pay for the delivery that they make, but you take it off also so it doesn't look so bad. Like,
Mm-hmm.
it's,
Mm-hmm. Mm-hmm.
okay. And
Yes.
you're able
So.
to do that.
Mm-hmm. So instead of telling your customer that, hey, I paid $20 for it, you better give me some money, extra money for it, like a tip. Your customer's not gonna ever do that, you know. You can't demand a tip. So what you can do is you can hide it, right?
And
And I'm gonna,
into the bill.
and there's also ways where you could, what do you call it? But in this case, yes. So yes, you can do that.
Okay.
Yeah, so you can hide that you marked them up 20% by, you don't have to, when you go into that billable expense, right? Instead of having the markup, right, you can actually go into the actual form itself, and you could do the quick math. Do you remember the quick math? And you can charge your customer that way too. So then you can kind of have it as a hidden fee.
Okay.
Okay. So yes, you can modify your invoices however you like, so the customer isn't aware. Okay. It's not illegal, okay, because a lot of companies do it unless the customer demands exactly to know why they have this. But of course, if they're not the one that's paying for, like if we already paid for the delivery, right, and they're the ones that's demanding it, then they should automatically know they're expecting that, they have to pay for something, but they don't know how much it is until they receive the bill. Okay, unless you discuss with them and you let them know it's $16.99 plus tax. I don't know. Okay, so most cases your customer should agree with everything that you do, but once again, you can tack in hidden fees, and you can make it appear like so. Okay. So there you go. That's how you do this reimbursable expense, and that's how you can pass it forward to your customer and bill them for it. Okay. Now, here is where we're going to go ahead and validate that these billing little windows. So, as you remember, when every time we go to an invoice, right? So let's go ahead and take a look. Every time we go to invoice, you have this little section here. Look. Right? You have this little section here that says, okay, we're on an invoice. Okay, so we have description, we have price, amount, and class. Okay, so this one, let's try the Academy Photography one. Okay, you have hours, rate, class, amount. Trying to find where it says customer and billing. Okay, so the previous one that we got to take a look at, so let me go back to that one. Okay, so let's go to the Miranda's Corner. Okay, or sorry. Let's do this again. So for example, right, any check that you write or any purchase orders that you do, you're gonna see this little window right here where it says customer. This is once again where you're going to link the expense to a particular individual. Okay. Now, once you once you tack on that exact expense to that customer, right? Then you see this little window right here that says billable, right? If I pull this out, it's gonna have billable with a question mark on it. So once again, you need to actually toggle this on, so then every expense that you do link a customer to, you want it to automatically appear as billable, okay? And that's exactly what we're going to do right now. We're going to set those preferences, because If you don't, what's going to happen is you're going to have to manually check mark whether you're going to choose to pass this bill along or not. Now, most cases, when you do link your customers to these particular expenses, you automatically want to bill them. So in order to toggle that preference, right, for this to appear, you need to go to your edit, and you're going to go to your preferences, edit preferences. You're going to click on time and billing, so you may have to scroll down a little more. Here you go, time, expenses. Okay, you're going to go to company, and here is where you're going to make your settings here. So first thing is, do you keep track of time? And we said yes. Okay, so if you remember, and when you keep track of time, what's going to happen is on your home page, okay, let me show you my home page. Let me click cancel. Close this out. Okay, on your home page, what's going to happen is you're going to have a little section under here, under your employees, right? Which, as you can see, right, if you use the enter time, right, if you keep track of time, this little icon's going to appear, right? And it can split into two ways. You can apply it for your to enter the time for your employees so you can pay them, or you can enter the time to pass along to a customer. Okay, so that's the more important thing here, that is when you toggle that specific question, right? Do you keep track of time? Especially if you have employees that work on an hourly wage, you definitely want to make sure that you keep track of time. And we'll talk more in depth with this in chapter 10 and chapter 11. Okay, so we want to make sure that that is there. Okay, so keeping track of time is there. And then let's go back to my preferences. And we go back to company. So then now we have that we want to keep track of time. So then the next question that it's going to be asked is for when the first day of the work week. Okay, so you want to do every monthly, right? Well, how do you keep track of time? Because you usually keep track maybe on the first day of the week, which is always going to be a Monday, right? Especially when you're doing your billing, right? Or when you pay your employees. You always want to start on Monday, okay? And then, of course, you want to make sure that you want to see right here. This is where it says mark all time entries as billable. Okay, and that means every time you link an expense to somebody, right, especially when it's time, it's going to be marked as billable. Okay, so this is time related. Okay, and then it says here, what about invoicing? So invoicing your customers. So here's a few things here. You could track reimbursable expense as income. So once again, this is kind of weird because it's an expense, and you're going to keep track of it as an income, which in this case, yes, because once you paid for it, right, the purpose of a reimbursement is that you want that to reflect as income, right? You want that to be reflect as thing that's the money that you've earned from the customer, even though you paid for it in advance, right? It's an expense to you, but to them, it's income for them, okay, or income on their perspective. So once we make sure that this works, so then the next time that we use a reimbursable expense account, it should reflect as income to you, even though you paid for it in advance. Okay, and of course you want to make sure that you want to check mark this too. So make all expenses billable. So therefore, when I tack on that expense to that particular customer, it's automatically going to send them a bill. Okay, by once I validate that check mark is automatically there, that you're going to bill this customer for this particular expense. So you definitely want to make sure that this is available, because most often, and most of the time, when you do charge your customers and you do tack on them, you don't want to forget to bill them, okay? And plus, by the time when we bill them, right, or we invoice them, right, we also get that window. Are you going to include it or you're not going to include it? Okay, so you even get the second double choice whether you choose to select to bill them or not. Okay, so that's definitely want to make sure that you want to keep that in mind. Then you have the next section, which is dealing with your markup. So instead of having to put a whatchamacallit, instead of having to toggle a certain percentage for every single customer, I want it to be default a specific amount. Now, of course, you can charge your customer whatever kind of markup price you want to do. Oftentimes, if you don't know this, a lot of retail stores, right, they mark up their prices anywhere from 40% to even 100%. Okay, especially like high-end boutiques, right? They can buy it for $50 and charge you $100. That's a 100% profit right there. But of course, no one knows that, right? Everyone thinks it's the brand that they're paying. No, it's the store that they're paying. Okay, so there's a little, a little business tip there. You definitely want to make a profit margin that is enough that the customer, it can still be able to pay for it, right? You don't want to mark up a ridiculous amount and, enough to scare them away. Okay? So definitely a markup percentage could be whatever it is to your discretion. But in this case, if I'm doing a reimbursable expense or if I'm having someone purchase an item for me, I'm going to mark up my value 20%, and this is the default. But of course, you don't have to necessarily use 20%, right? You can always overrun it like we saw before in that window, right? When we took a look at the markup expense, we can toggle it at any given time. This is just so then, you don't have to type it in every single time. And plus, especially, you definitely want to be very consistent with all of your customers. You don't want to charge this person 25%, that person 50%, and then this person 20%, right? That's going to kind of see that you have favoritism for this particular customer. But of course, yes, if they're friends or family and they're trying to support your company, then yes, you can give them that friendly discount. But once again, you want to be consistent and make sure that your customers don't know that you're favoritizing a specific customer. And of course, you want to set up which account you want to collect the reimbursable expenses, which we see here as expense markup. Okay. So that's this section here. And once I go ahead and see that, so then the next time I bill somebody or pass the expense along to someone else, then I know for a fact that, that it's going to automatically choose to bill them or pass the bill along to them automatically. Okay? All right. Any questions on toggling that section there? Okay. So once again, we got to take a look at that. So we already linked our reimbursable expense to as an income, right? Or in this case, we did the reimbursable markup, and we used that to report as income. Okay. So then the next one is we're going to be talking about is called two-sided items. So once again, we talked very briefly about this, right? Where one item could be linked to multiple account types, right? We got to take a look at in the sales process, right? When we create an item, a product, an inventory item, not only are you linking your expenses, but you're linking your income and you're linking your asset account. So that's exactly what this is. So it's actually allowing you to use an item for both an expense and an income at the same time. Okay, so that's what a two-sided item is, because it makes sense, right? When you sell a product, you are receiving income, but at the same time, you're also getting rid of the item. So therefore, that's considered an expense to the company, right? And you're going to have to calculate what it cost you to sell that item. Hence, cost of goods sold is going to be the expense item that is linked directly to the income that you decided to sell that product for. So once again, that's a perfect example of a double-sided, or sorry, I keep saying double-sided, a two-sided item. All right, and here are a few examples that you can use double-sided items for, two-sided items, okay? We already saw the first example, which is to link reimbursable expenses, right? We saw that how I charged myself, right? I wrote a check out because I had to make an expense first. And then when I billed my customer, it linked automatically to my income account. Okay, so that is a two-sided item, and we're not weird. Since we already took a look at the first example, I'm not going to show you another one. Instead, I'm going to show you the other two, which is the second one is when you do custom orders for your customers. Okay, so in this case, when we do custom order parts, okay, so when we make a purchase for a specific customer, we can go ahead and pass that expense. Whoops. We can pass that expense along to make the customer pay for it, because they used us as the middlemen, and they've asked us to make a custom order for this particular person, right? And we'll take an example of what that looks like. And you can also use it for a subcontracted labor. So for example, if there was a photo shoot going on, right? And they said that they want 10 photographers on the set, right? And your company, right? You have one. Then you have to go through a third-party vendor or any 1099 contractors to have the rest of the people there, right? To go ahead and take the photo shoot. You know, it could be a huge event. Maybe there's a red carpet on one side, and then you want pictures of, the actual event going on, etc., right? So that's where you can use a two-sided item to go ahead and create and link those expenses for subcontracted labor. Okay. So let's go ahead and take a look at the very, very, very first one, which is making a custom order for your customer. Okay. So in this case, we are going to take a look at creating a inventory part. Okay. So in this case, because this is actually, we're going to create a non-inventory part, because, right, the idea behind this is that we're not going to sell this item very often, right? Where it's something that we can sell, but we don't sell it as often, okay? So let's go ahead and do some review. How do we enter in a new item?
Chart of an account.
Okay, so chart of accounts is only your accounts. It has nothing to do with your items.
Would it be items and services?
Items and services, where can you find that?
Right there on the homepage under the company.
Homepage or the company, good. Homepage of the company. Where else can you find the item list?
It's on the menu bar under company.
Menu bar on the company. Let's see.
Is it there?
No, it doesn't look like it. So where else do you think we can find it?
On the edit,
Not edit, but you're getting warmer.
Lists, maybe?
List, correct.
list.
Second thing on there is
There it is.
items.
There it is, yeah.
So once we get to the items list, okay, how do I create a new item?
You click the bottom, right there on the items corner, on the bottom corner. There, new, it's up there.
Good. Okay. Where else can I create a new item? How else can I create a new item? If I'm already here, how else can I create a new item?
Go down to the item tab at the bottom, I think, and there should be a menu there to create a new one.
Yes, we just did that one.
Oh, I'm sorry.
No worries. Okay. Right.
Right click.
Right click. Excellent. So you can right click and you can click new. Okay. And then again, the hidden one that you can create a new item is if you go to vendors on the menu bar, right? And you go down to inventory. Okay, hold on. Vendors, inventory activity. You can create a new item that way too. Okay, so remember, if you guys for 2018, you guys get what's called the inventory center. That's also one of the ways that you can enter in a new item through the inventory center as well. Okay, but again, I have the new later edition 2019, so that's when they got rid of it. So I don't have an inventory center. However, it does recognize that I can go to inventory activities and still create a new item that way. Okay, especially because the product that I'm selling is an inventory item. So I'm going to go ahead and go through this way. We are going to create a non-inventory part. Okay, and what we're going to do is we're going to name this as custom camera. Okay. All right, and of course, with that, the description once again is customizable camera. Now the question is this? So you see here where it says this item is used as an assembly or is purchased for a specific customer / job. That is definitely something you definitely want to be able to click on because it is an item that you are going to make a customer that you are linking a customer to. All right, so you have the cost. Okay, of course the cost is going to be depending on what kind of camera they're going to get because this is a custom camera, right? They can choose between the different brands of cameras, right? It could be a Nikon, it could be a Canon, it could be a Fuji, right? So this is going to be, it's going to depend on what kind of camera that they want. And if they want to go through digital versus DSLR, right? You want to, you don't want to put a cost on there because it's going to be what the customer wants. If you're gonna give them a one of those booklets that allows you to choose what kind of camera that they want, what kind of lens that they want, then that's where the cost is going to be based on whatever it says in that book or whatever you mark it as, right? Usually they do have set pricing, of course, but because you are technically making the purchase for them, and you will be tacking on a higher price for it, right? You just let the customer know, okay, it's going to be this plus this plus this. So in this case, you can't tell what the cost is going to be because that's where if you're getting a custom camera, it depends on what the model is. It depends what kind of camera it is. And it depends if they want like additional stuff, if they want additional equipment, if they want a tripod, right? If they want additional stuff, you cannot determine what the cost can be. You can't even do a base point because you just don't know what it is. However, what you can do is you can link them, okay? So in this case, it will be a cost of goods sold, of course, because it's going to cost you, wrong one. Cost of goods sold, there you go. Okay, and of course, preferred vendor, right? Especially if you only have one specific vendor that you do make a purchase from, then that's where you can go ahead and link them there. But let's say you have a custom camera that your customer wants to buy from you, right? But you have multiple vendors or multiple outlooks, right? Let's say I have one that sells a specific camera. The other one is a custom camera or they hand built it themselves, or maybe it's the Nikon store, right? You may have specific vendors for specific cameras. So in this case, you can choose to whether you link them or not, but most cases you wouldn't just because it's a custom camera. You don't know where you're going to buy it from. Okay, and of course, you can't determine what the price is if you don't know what it's going to cost you. However, you can say that this item will be 100% taxed. And what you're going to link this sales to is your income account for sales. Okay. And then I'm going to go ahead and click OK. All right. So here I have my custom camera item right here. And I just linked an expense and an income account. So that's the example of the two-sided item. So when we make a purchase, right, we can use this item either as an expense or as an income, or we could do them both at the same time. Okay, because what the accounting behind the scenes does is that if you end up selling this item, right, we're receiving income, but at the same time, it's going to update your inventory and it's going to calculate the cost it took you to sell that item. Okay, so that is how you create a two-sided item. And now that we have done that, let's go ahead and create this purchase item for this person. Okay, so let's go ahead and click on that purchase orders. Okay, so that's one way to do it on the home page. Where else can you also do a purchase order? Where else can you enter in a purchase order?
Is that right there, right, create an invoice?
Okay, so purchase order and creating an invoice are two separate things. One is you're purchasing it from a vendor, and creating an invoice is when you bill your customers. Okay. How else can you enter in a purchase order? Anybody? This was yesterday.
Yeah, you can go to the vendor menu
You can go to vendor, where?
and click the purchase order from the vendor. From the vendor menu.
On the vendor menu, yes, you can create a purchase order through the vendor menu. Good. Where else can you create a purchase order?
from the bill tracker shortcut.
Bill tracker shortcuts. So if I go to, where's this shortcut? What's that shortcut called? What do you call this blue thing?
Shortcuts? I don't know.
Okay. This is called the icon bar. Okay, so icon bar. Okay, so we're here on the bill tracker. Where else can we do?
And then go down to manage transactions.
Perfect. Okay. Where else can you enter in a purchase order?
From the home page.
From the home page. Okay, we already saw that one. That was the first one. Okay. I'm going to tell you this now, so it's similar to what you just took an exam for. You can be asked a navigation question, okay, as a multiple choice. You can say, well, how do you get to the vendor center? You choose. You can have the vendor center on the home page, the vendor center on the icon bar, or you could go to the vendor center through the menu bar. You can be asked that specific question. But on top of that, your certification is also going to test you on navigation. So you're not going to be given the home page as all of your answers because that's going to make it too easy. They're going to try to test you that you should know the ins and outs of QuickBooks. So therefore, you can even be asked a question, right? How do you enter in a bill? And if you only know the home page, and they don't accept that answer, it's going to tell you, try again. Then you're going to have to exhaust every single way. So whether it's through the menu bar, whether it's through the icon bar, through the vendor center itself, you're going to have to exhaust every single way, all right? You could get it right on the first time, right? Let's say I do click on my homepage and I get that answer correct. Awesome. But what if you get denied for the homepage? And then let's say you go to the menu bar and you get denied. You can't enter a bill there. And you go to the vendor center, right? And you go to manage transaction at the bottom, they deny you. And then you go to at the very top and you say enter bills. They deny you. Until you go right click, enter in a bill, and they say, okay, that's correct. You may have to exhaust every single way it is that in order for you to successfully get past the navigation question. Okay, so once again, the book only shows you 2 ways. I'm here to show you all the ways. Okay, so we got to recognize 3 ways to enter in a purchase order. All right, so here's the next hint. Any way that you can get to the vendor center, whether it's the home page, the icon bar, or the menu bar, okay? How do you create a purchase order?
You can right click and create a purchase order.
You can right click and create a purchase order, okay? All right.
You can also go down to manage transactions there.
Purchase order. And of course, I kind of gave you guys the hint. You could go to transactions, new transactions at the top, and create a purchase order that way too. Okay, so in this case, I am going to make a purchase order from Ace Supply, and I'm going to go ahead and right click them and create a purchase order. So here they are, right? What class do they belong to? In this case, I believe this is San Jose. Because let's see who is making this purchase. I believe it's Mr. Either Jerry Perez or Bob Mason. Let's take a look. So we're going to be making an invoice, okay, or creating a purchase order for Maria Cruz, which is Maria Cruz is a Walnut Creek location. So this purchase is for Walnut Creek. So once again, it doesn't matter when you make your purchase order. Okay, so 2019-1. The item that we're going to do is we're only going to make one item, or the item, excuse me, not quantity, is going to be your custom camera. Okay? Okay? Oh, I thought I filled in my description for that. Custom camera. There it is. Quantity, I only want one. Okay? And now here it says, are you going to buy this for our particular customer? And yes, we are. We're buying this for Miss Maria Cruz. Branch opening. Okay? And of course, it's going to say what amount. In this case, since the custom camera that they wanted to buy, okay, so you could choose either you put it under the rate or you put it under the amount. If you put it under the rate, it's going to multiply by the quantity. So in this case, I am purchasing this camera for Miss Maria Cruz for the amount of $398. Okay? $398 is what's going to cost me. And it says, would you like to update this? You want to say no, because a custom camera depends on what they're trying to purchase from you. All right, so here it's up to you if you want to put a memo here. Let's say they bought, I don't know, the Canon DSLR 3000, 3000X, because they probably bought a really nice one. I don't know. Okay, and once again, here's the custom camera. So what you're gonna get billed for is once you receive the bill, right? You're gonna link it to Maria Cruz, okay? And I'm gonna go ahead and click save and close. So this is a purchase order for Maria Cruz. Save and close. You got that beep of approval, okay? So once again, now let's say fast forward a couple days later. I end up receiving that custom camera, right? You can't expect a custom camera to come within the next day. So I'm going to go ahead and say I got this and I received a bill for it. Once I've done that, right, I'm going to say, right, this was from Ace Supply. And once again, it says that, hey, you have a purchase order related to this. And you're going to click yes, I want to use this. This is what I'm receiving the bill for, and I'm going to go ahead and click OK. So you're going to be receiving a bill for this camera for the $398. And check this out, because I already said that this purchase order is for Maria Cruz, it automatically pulled that information down here and says we're going to bill her. Okay, automatically, you don't need to do anything. But in this case, I'm going to say I received this on the 10th. Okay, so therefore, now here's the thing. Maria Cruz is now responsible to pay for this, right? Now, I have the choice, if I wanted to, is that I could make a payment and I can receive a discount. Now, does the customer know that? No. So let's say the customer, because you give them terms too, the customer takes advantage and doesn't pay or doesn't take advantage of the discount and they pay the last day. But you want to go ahead and make that payment ahead of time instead of wait for Maria to pay you back for this particular item. Then you can go ahead and pay forth the bill and just collect that money as a reimbursement, right? But in this case, we're charging her as the item, okay? And once again, it's going to be PO 2019-1 for $398, right? And I'm going to go ahead and click save and close because we automatically are going to bill Miss Maria Cruz right here to check mark that we are going to bill her. Okay, and she's from the Walnut Creek location, so we're going to click OK, save and close. So now in our side, we're pending on a bill. However, we can now charge Miss Maria Cruz for that camera. Okay, so now that we received it on the 10th, I'm also going to charge her that very same day. So once again, you're going to get this little window that says, hey, you have a billable item available. Are you going to include it or are you going to exclude it? And we're going to include it. So once again, we talked about the 3 topics this time. Since we purchased an item for Miss Maria Cruz, it's going to be located in the item section. All right, so there you go. I'm here at the item section. And now the question is, I'm going to go ahead and click on this. Now notice this. There is no markup window. Okay? Okay, so therefore I have to calculate this on my own. So once I said that, okay, well, Miss Maria Cruz, she owes me for this one camera for $398. And I'm going to go ahead and validate this and said, okay. So here, now the bill shows that it's for $398. What you can do here is you can come over here and we're going to do a quick math. Because I'm not going to break even. I'm going to charge her a higher price. I'm going to mark up the price on my end. So this is where you can do the same thing for a reimbursable expense as well. If you don't want the customer to know that you marked them 20%, you can take the item and again, you could do, you could type it in 389, or if you don't want to do that, you can automatically just press in the key and it automatically brings up the receipt. So here I'm going to multiply, okay? Now the rule here is that it's going to be 1 plus the percentage rate. So 1 plus 20% or 0.2 gives me 1.2%, okay? And this is where you can do your enter. And here it marked her up, so then now she owes me a total of $477 versus the $398 because I marked her up 20%. Okay? And there you have it. That's how you can hide your markup value by doing a quick math on the actual invoice itself. And she doesn't know that you marked her up 20%. Okay? So yes, instead of having it displayed that you marked them up for 20%, instead of having that section there, you can just do it right in the actual rate itself or the amount itself. And here you go, $477 is now what she owes you. So not only do you get that as income because she's paying for this particular item, you're getting a section of the money back, all right? You're profiting 20%. Okay? And again, we're going to say thank you for your business. Okay? And you can say custom camera. What did I say? Canon DSLR 3000X, something like that. Whatever the camera is. Okay? And once I've looked, everything looks validated, right? I'm going to bill her the same day I received my camera, right? Or you can bill her a couple days after. It just depends on when you feel that you should bill them. But in most cases, right? Here is the PO number. Since we did make a purchase order, right? The PO number is the 2019-1. All right. And again, you can give her a discount, so she could take advantage of that. But you could also take advantage of that as well by making a payment to the billing person first, and then claim whatever money that she pays for this. Okay? And once again, now that everything looks good, since it's taxed, the total bill is now $517. So you just went from $398 to $517. Okay, and now I can go ahead and click Save and Close. Okay. Oh, Classes Walnut Creek. All right. So any questions? So Beep of Approval. Any questions on how We just made a custom purchase for a particular customer and we billed them, marking up our selling price at 20%. Any questions there?
No, that was my question earlier, and now you explain it better.
Yes,
I
because this is
understand
this is the exact example here.
Thank you.
So yes, you can charge your customers for more because especially now that we linked this specific item is because they're using you as the middleman. They can easily go online and buy the camera themselves, right? I don't know if it's going to be at market price or whatever price that the online is going to sell them to. But they're saying, no, I want to buy it through you because I want you to use that camera to take to take the photos. So they said, I'm going to go through you. I don't care. So maybe it's a commercial type of customer that because they have the money, they want the good quality. They decide to just push forth and say, hey, I'm just going to buy the custom camera through you. Okay. So that is how you can tack on a customized camera, or you can do a purchase for a particular customer and pass that bill along to them and have them pay for it. Okay. So that was that example. Okay. So then now we're going to take a look at subcontracted labor. Okay, let me look for that section here. So not this one. Let's see. Let's see what page it is. Using service items to track subcontracted labor. Yes, here it is. Okay. So once again, here we need to create some kind of service item that allows us to use it for specific subcontracted labor. So once again, this is anybody dealing with like the 1099, right? If you have someone that isn't on your payroll, but you need extra people, or you need to have someone be a 1099 contractor, right? They work for you based on whenever they need you. So here we're gonna go ahead and take a look at this one item. I believe this item is already created, the photographer item. So once again, items and services, and let's take a look if we have the photographer. Yes, we have the photographer, right? If we double click on it, you can edit it. And we're going to make sure a couple things that the preferred vendor is going to be, is it East Bay Photographers? Let's see. Photographer.
Yes, East Bay Photography.
East Bay Photographer, perfect. Once again, what you're going to notice here is that, okay, so where is this? Okay, so it is East Bay Photographers. East Bay Photographers. Now, let's notice this. It cost me $75 per photographer, right? And what I'm going to charge my customer is $125 per photographer. So here already, I can choose this because this is their setting rate that they want. They want to get paid $75 from me to use them as a company for the photographers. But because I'm having to make all the phone calls, schedule all the people, have them come here, and they're working for my company, I'm going to charge my customers a higher price for it. So here, it's going to cost me $75, but I'm going to charge them $125. So right here, it's already set already. And all I had to do was validate that East Bay Photographers is my preferred vendor or preferred 1099 contractor that I'm going to use for this setting. And I'm going to go ahead and click OK. So then once I have that, okay, the next thing I'm going to do, I'm just going to bill my customer for this particular thing. So once again, we're going to visit, we're going to be billed or we're going to receive a bill from East Bay photographers, right? Because in this case, I had to get, let me see, I think I got 6 for Maria Cruz, and I had 15 for Bob Mason. So let's take a look at this. Okay, I'm going to go ahead and enter in a bill. Okay, so once again, I'm going to go through the home page, but make sure you know all the ways to enter in a bill. Okay. And this is for East Bay, right? So the company decided to say, hey, I'm billing you for all the jobs that you requested me for. Okay, so in this case, the date on here is going to be that looks like the 3rd,
Yes.
bill number 6 5678. Okay, so let's go ahead and fill that in. So they billed us on the 3rd of February. This is 5678. And now the amount, right? I don't know what the amount is, but for sure I'm going to select items. Okay, so here's the one thing that you need to know. Expenses are your accounts. Items are the things that you set for your items list, right? So in this case, I had photographers. Okay, now you want to be very careful on this because I've done this many times. Sometimes I'll accidentally validate its photo paper, but I need to make sure I select photographer. And in this case, I had 6 photographers, okay, at $75 for the Maria Cruz branch opening. Okay, once again, her class is Walnut Creek, and look, it already says I'm gonna bill her. Okay, and then now I also got a bill, okay, in regards to 15 photographers for Bob Mason. Okay, so that means Bob Mason also had his own little, I guess, outdoor photo shoot, and he wanted 15 cameramen there. And of course, this guy is from San Jose. Okay, so notice this. I'm going to be billing Maria Cruz, and I'm going to be billing Bob Mason for these subcontractors that they wanted. Okay, but notice this. I'm only being charged $75 per person. Okay, but when I pass this bill along to these particular individuals, they're going to get marked up at $125 per person. So here, I'm going to go ahead and click Save and Close. Okay, so since we've already picked on Maria Cruz for quite some time now, let's go ahead and create that invoice for Mr. Bob Mason. Okay, Bob Mason. All right, and once again, you're going to get that billable window. And I'm going to go ahead and say yes, because I want to bill Mr. Bob Mason for these photographers. And once again, the photographers were items. So there you go. I click on here and I check mark this, right? That he had 15 photographers on his site. And I'm going to go ahead and click OK. Now notice this. It's going to automatically recognize that we are going to charge him the $125 per person. So therefore, his bill is now a whopping $18.75, right? It's a service. Okay? And we can go ahead and say, thank you for your business. And I'm going to say here, 15 photographers. Okay, and I can go ahead and click Save and Close. Okay. So once again, you don't have to wait till your customer pays you for you to go ahead and pay your vendor. You can go ahead and take advantage of that, okay, by just making the payment yourself. Now, of course, you never want to out yourself if your customer never pays at the end of the day. So you can choose to have your customer pay first, and you just pass that along to pay for the bill. Now, of course, you're getting a profit out of it. So does it matter what if you receive the bill or not? Or does it matter if you receive their payment or not? Once again, if something like that, right? It's gonna for us it cost me significantly less than that. However, it's still $1,000 that I have to out. So again, if you choose, you can choose to wait until your customer pays you first, and then you can pass that along to your bill, okay, and pay the bill off using that, okay. But once again, that's how you received a bill, and it's for subcontracted labor, okay. As we see that, we tagged them to our customer, right? We said that, okay, because you wanted X amount of photographers on your photo shoot, I'm setting you a bill for that because you wanted extra people on your site to take photos. So yeah, so that's how you use the two-sided items for a subcontracted labor. Okay. Any questions for that? So once again, it's up to you if you're going to want to look at unbilled costs by your jobs report. Once again, every report that you do in QuickBooks is just once again going to be depending on you know, what position you are in the company. If it's something that you want to keep a track of, so especially when you're doing it reimbursable expenses. So that's definitely, as we saw, it had us deal with the vendor section, and it also had to deal with us passing forth that invoice or passing forth that bill and having it invoiced for our customers. So this one could be considered an accounts payable or accounts receivable kind of position. Okay. So, yeah. Okay, so that part, once again, if you're making an expense that you don't want to pay for and you want to pass that along to your customers because they're the ones that want that expense, you can go ahead and send it off to them. So, right, as you can see this little enter bills window, it says that you can automatically pass this along to your customer. So just exactly like that, okay? You can pass the bill on to your customer. All right, so I'm gonna stop here, okay? If you guys don't have any questions, I'm gonna stop here. And when we come back from the break, we'll go ahead and